Hello, welcome to BI's video series. My name is Stephen Lam, AIA Insurance Analyst, and I'm joined by Matt Ingram, Senior Analyst covering Australia equities. Today, we're going to discuss our outlook for Asian insurers for the second half of this year.
Thanks for the welcome, Stephen. It's certainly great to be back in Hong Kong after the pandemic, and there has been a very strong first half for P&C insurers regionally, and certainly so in Australia. Again, as we pointed out in December, there are three main factors for this. The first is obviously investment yields. We've had huge rate hikes from central banks globally. Those have fed through to those investment yields for the P&C insurers. They're going to be at least 200 basis points higher this year than they were last year. Do we see further increases of that magnitude in the second half? Well, probably not. Central banks are less hawkish than they were. But interest rates are going to settle at a much higher level, and so we certainly see that tailwind continuing into the second half. For the whole of fiscal 2023, we see a 40 to 60% profit tailwind for the three big Australian insurers on the back of that interest rates momentum. The second major theme that's been driving those P&C insurers in Australia in the first half has been a capital return story, particularly for IAG and Suncorp. We've got a focus idea on Suncorp at the moment, which is in the process of selling its bank to ANZ. On the completion of that deal, they're going to have about $4.1 billion of cash profit, which they've said will be largely returned to shareholders. So that bumps their all-in dividend yield up to around 30%, which is well above their Asian financials peers. Similarly, but to a lesser magnitude, IAG has a big capital return story as well. They'll be returning more than $500 million of reserves that they made for business continuity insurance during the pandemic. Those are no longer needed, so that bumps their yield into double-digit territory, which again is much higher than average for Australia for Asian financials. The final story, and this has been a global trend, is the really firm premium market. We've seen cumulative increases for the big three Australian insurers of 35 to 55% since 2016. That's tapering off a bit, and the guidance is for more increases at a lower level, but certainly they've remained well above claims inflation over that period. And we continue to see that is a decent foil against the increasing claims inflation that we're seeing. So we've had three really strong tailwinds for those Australian P&C insurers. When do you see things turning for North Asian life insurers? Could you talk us through those trends for those companies?
Sure. So we think that obviously the profit recovery is pretty strong. They're going to deliver very nicely shareholders' return as well. And I guess last but not the least is that hopefully the investment return can also do a little bit of rebound this year, coming from a very low base in 2022. So for example, in China, we think the premiums growth can grow about 10% this year. I think that's quite achievable, largely driven by non-auto and auto insurance, but more so on the non-auto side, coming from very strong volume growth in terms of the recovery, the reopening impact. Now, for the Japanese P&C peers, domestically, it's still very, very moderate, low single-digit premiums growth that we're expecting. But most of the business increase is going to come from the overseas markets, just like you said. It's about the rate hardening environment. They're getting some very strong tailwinds in terms of overseas premiums, price increases, double digits premiums growth from the overseas units are very achievable, we think. So now, what's actually interesting about the life insurance peers is that, like you said, they've underperformed quite a bit versus the MSCI Asia Pacific Index. The critical point is coming from the Japanese life peers, is because in the beginning of the year we had a strong expectation about BOJ lifting or doing more tweaks in terms of the yield curve control, but that didn't happen for the last 6 months, almost 6 months. So the ball right now is definitely on BOJ's court right now. The new governor, Kazuo Ueda, whether or not he will execute on the market expectation that the YCC will be lifted or further tweaked. Until that happens, basically it's status quo in terms of the investment yield situation locally in Japan. Now, a bit better on the Hong Kong and mainland China side. So I would highlight AIA as one of a focus idea. We think that 40% new business growth is possible this year against consensus 22% increase. For the main reasons, because the return of mainland visitors, you might have bumped into a few of them. The Strip But then, long story short, it's not just about the borders we open and they're allowed to come here. It's also about the demand. There's a lot of pent-up demand being locked up in the past 3 years. And because the savings rate in China, in terms of the deposit rate, is lower than Hong Kong. So it attracts a lot of the money flow down here. And Hong Kong is definitely the first stop for them. What's lacking in the mainland China story is the investment return. In the beginning of the year, we have a very short-lived rally in terms of equity market. That couldn't last for too long. So the second half is definitely about whether or not the administration will come out with a more stimulus measure to, prop up the equity and investor sentiment. Until that happens, mainland China remains as a sales recovery story, not an investment return story.
So looking into the second half of 2023, life insurance remains more a game for the patient, with the exception perhaps of AIA. That's a focus idea of ours, and it certainly looks better from a growth point of view than its peer group in the mainland. There's no doubt it was a very turbulent first half of 2023 with collapses of banks, huge increases in interest rates across the world. So we wish you a hopefully far less turbulent second half and very happy investing in the Asia Pacific insurance space.